Well, just interesting yesterday with the Reserve Bank electing to leave interest rates on hold. We still think the outlook for interest rates is down. And the reason for that is, our view is the Reserve Bank's trying to build a bit of a bridge in the economy with the mining sector coming off. The rest of the economy needs to lift in terms of its output. And they're using interest rates to do that, to stimulate some of the other parts of the economy that have really been in recession for quite some time. So things like property construction, obviously retail, and manufacturing with the Australian dollar all need some support. And really that's going to take some time. It will happen, but it takes some time. So we think that the Reserve Bank's just waiting to see the benefit of the recent cuts, but most likely that rates will go lower from here. It's always hard with currencies to predict the outcome of where the currency is going, but if you look at those factors, you look at the improvement in the US economy, that their currency might strengthen on the back of that. If you look at our interest rates are now starting to get pretty low, and even with our GDP number that came out today, it was pretty soft. So again, there'll probably be more pressure on the Australian dollar on that basis. And we do think that maybe that 85-cent range is more fair value for the Australian dollar, and it will provide an enormous benefit to our economy. A lot of the sectors have really been hit quite hard. You think of tourism and what impact the Australian dollar has had on tourism sector, but even on retail, manufacturing obviously. So it's a significant relief, and we think that it's going to prove to be quite a benefit if it does happen. So it's been a fairly good year this year in terms of investment markets, and we're coming to June and June 30, the end of the financial year. It's always good to maybe review things, both in terms of investment markets, but also your own personal circumstances. Always make sure you're on top of things before the end of the financial year. So we want a bit of a summary of both investment markets, how they've performed, what our outlook is, and also reviewing your personal circumstances, making sure you've done everything that needs to be done before the end of the financial year. Be a good time now to talk to your advisor.